So today I'm going to be talking about the difference between a mutual fund and a small case. If you haven't already watched the meaning of small case, I made a reel just a day before, so you can watch that. So the difference is not big. Small case and mutual fund both do the same things at the end of the day. That is taking your funds and helping you get returns on those funds without you doing the actual work of investing. The differences are is that small case is more personalized because you have to pick your stocks, or you can also pick the fund, that is the stocks are already pre-picked for you, so you just have to invest the money. Mutual fund, the difference here is that you cannot pick certain stocks. The mutual fund is going to be doing that for you. That is, you have to pick a scheme. Second difference is that you can choose how much money you want to put in which stock in case of small cases, but in mutual fund you have no idea where the money is going. You just need to put your funds. Third difference is that small case is investing in equity shares, and hence you get your equity shares credited to your demat account. Mutual funds also invest in debt securities or a combination of debt and equity. And in mutual funds, you do not get equity shares, you get units allotted to you. Small case is said to be a little bit more risky as compared to mutual funds. Even though small case has categories of low, moderate, and high risk, small case talks about debt and equity, and debt securities have a fixed rate of interest, whereas equity shares you cannot rely on them because of the volatile market. You never know when the equity market can go up or go down, hence it is considered as more risky. When it comes to cost, the cost of small case is considered less compared to mutual fund. Small case has capped their cost at rupees 100 or 1.5% of the total amount invested, or if you have an SIP in small case, then it is capped at rupees 10 or 1.5% of the SIP amount. Whereas for mutual fund, there is an exit load. When you redeem the entire amount, 1% is again charged on that. Now, mutual funds may or may not charge entry and exit load. It depends on the mutual fund that you pick out. So make sure you take the decision of choosing a small case or a mutual fund very carefully. You can choose small case if you know how the stock market is going to move. If you have knowledge about the market, you can choose small case. But if you have no idea, you can just choose a mutual fund scheme which gives good returns, which is less risky, and just invest in them.